Welcome back to the morning show here on Arise News. Joining us now to discuss the Central Bank of Nigeria's Governor's Godwin Emefiele's reappointment is Johnson Chukwu, Managing Director of Cowry Asset. You're welcome.
My pleasure.
Good to have you here.
Thank
now, what do you think recommends Godwin Emefiele for this renomination? And do you see the Senate promptly confirming him, or do you see any danger of the Senate politicizing it?
Well, let me start from what the first part of your question. What do I think recommended him for reappointment? A couple of factors. But let's even start from what we may call a strenuous factor. And that strenuous factor is the fact that we are witnessing a transition in the political environment. I mean, we are going to see a disbandment of the current Federal Executive Council on the 22nd of May. So you are going to have the physical headship of the economic management team becoming vacant. So it also means that if you have a vacant monetary policy head, then you have nobody managing the economy. That's one factor. So, and I think the people who framed the CBN Act took cognizance of that by saying, look, the CBN governor will be there for 5 years, hoping that the 5 years will, in very rare instances, coincide with the exit of a Federal Executive Council. That's one factor. Two, if you cast your mind back to the past 4 years, you observe that we've seen a major lacuna in the fiscal space. We saw a situation where there was almost nothing happening in the fiscal space. I mean, that has been repeated severally at the announcement of the Monetary Policy Committee meetings, where the Monetary Committee members urged the executive arm of government to step up the act. And we realized that in the past 4 years, the economy has been largely managed by the central bank governor as virtually the only policy-driving factor in determining the outcome of the performance of the economy. So that will ordinarily recommend him for a reappointment, given that you can actually say that 80% of what has happened in the economy, or repairing the economy from a recession or pulling out of a recession back to growth, was largely driven by the monetary policy authorities. You've seen a situation where the monetary policy had to evolve tools that mimic the role of fiscal policy in order to stabilize the economy. And I think those are the major factors that drove, that must have informed the decision of the president to reappoint the CBN governor for a second time. Then the second aspect of your question, do I think the Senate will play politics with the reappointment, or they will expeditiously approve the reappointment? I believe in the elected self-interest of the country that the Senate will consider this appointment, the approval of this appointment expeditiously. Simple reason, I mentioned the fact that you can't afford to have vacancy in the monetary policy management team and as well as the fiscal policy management team. Right now, we don't know who will be appointed the Minister of Finance. And it simply means that investors, all market operators within the economy, will be at a loss on what will be both the monetary policy direction and the fiscal policy direction. At least if we reappoint him, we have some level of certainty and say, look, we know the monetary policy direction of the government. So what we now have to deal with is the uncertainty associated with the fiscal policy direction. So for that reason, if we want this economy to continue to grow and enjoy some level of confidence among investors, they need to expeditiously approve his renomination.
What should the governor of CBN prioritize for his final term?
If you ask me, I think he has already signposted that in the announcement that was made at the MPC meeting of March 2019. You saw in that announcement that the CBN governor, in announcing the decision of the MPC, said that they reduced the monetary policy rate from 14% to 13%, irrespective of the fact that they expect an uptick in inflation from the month of March up to the month of May. What that means is that the central bank has said that we're going to prioritize economic growth, even if it comes at the cost of higher inflation. Unlike what we had in the past, where they kept maintaining contractionary monetary policies to fight inflation. But for the first time, they said, look, we are aware that inflation may move northwards, but we're going to deal with stimulating the real sector of the economy by reducing the monetary policy rate. So for me, that defines what I think will be the new direction of the CBN governor when his reappointment becomes confirmed.
Can we have some more details? Other programs of the CBN have been pointing or aimed at economic growth with limited success. Which ones in particular do you think he might focus on? we've mentioned a few earlier. Anchor borrowers is one of the major ones. There's also the boost towards the creative industry, trying to revitalize the textile industry. Which ones would be a priority for him?
I think what has limited the effectiveness of those policies is because economic agents are rational. And I will tell you what I mean by economic agents are rational. If, for instance, you create a special fund for the creative industry and you lend to them at 9%, or you go to the small and medium scale enterprise or any other sector, agricultural sector, and you lend them at 9%, what happens is that because money is fungible, money can easily move from one aspect of the economy to the other. The guys take the money at 9%, goes to the bank, and buys treasury bills at 12%. That gives him a margin of 3%, or goes and plays the money with the bank at 15%. Because there is an alternative that gives them lower risk and higher return. So what the central bank governor needs to do now is that, recognizing the weaknesses of targeting credit to specific sectors of the economy at sub-market rate, what I think he should do is what they did in the last MPC meeting, by trying to push down the economy-wide interest rate so that everybody who has a genuine business initiative can borrow at a reasonable rate.
And 9%?
Not necessarily, but over time, they're going to drive it down further. They've just reduced from 14% to 13.5% after more than 30 months of holding the rate at the same level. But right now, the 9% that you have given to some sectors of the economy has the weakness that those people can divert those funds to other high-yielding investment outlets and still have enough money to pay you and enjoy higher, what you call spread. But if you drive down the market rate, then you can stimulate the economy broadly. So I think the direction should be to stimulate the economy broadly so that you have growth in various aspects of the economy and not just necessarily targeting one sector.
Let me take you back to the point you made earlier about the CBN under Emefiele, focusing on both fiscal policies and monetary policy. In fact, that's one reason why some of his critics, say, look, you shouldn't do that again. It's not what they expect. Is it normal for a CBN governor to take on both the monetary policy responsibility and the fiscal policy? What danger does that pose? And what would you like to see going forward after a new cabinet comes in?
It is a misnomer. But in a situation of abnormalities, what you may need to do is adopt tools that are unconventional. And I did mention that we've witnessed a long period of fiscal hiatus, where the fiscal authorities have been very silent. I mean, cast your mind back to the past for a couple of months. What have we heard from the fiscal side? And what happened, I'll give you a classical example of where the monetary policy authorities evolved a tool that mimic the role of a fiscal policy tool, is the issue of the restriction of access to FS, about 42 items.
43 now.
Yeah, now it's not 43 items. Basically what happened is this. If you had a very vibrant fiscal authority, that decision to restrict importation or make the cost of importation of those items would have been handled at the fiscal side using trade policy. The government, the fiscal authority, one of the tools of fiscal authority is imposition of duties and tariffs. So if the fiscal authority had imposed higher tariff on those items that make them uncompetitive to bring them in, there won't be any need for the central bank to have a discriminatory foreign exchange policy as it relates to those items. And that's why I said, look, a situation where the CBN governor maybe had pushed that, why don't we impose higher tariff on these products? And then there was no response. So he had no choice than to evolve something that could mimic that higher tariff by saying you can't access FX at a CBN window. So if you have to go to the parallel market window, you already have a tax on it because you're going to buy that dollar at a much higher rate than you would have bought at the official window. That effectively is a tax you had imposed on those products, which could have been done using fiscal policy. So we're dealing with an abnormality. And such an abnormality may have necessitated some of the tools that the CBN governor had to adopt to stabilize the economy.
Right.
But, what's your assessment of the reaction by market players to this renomination? I mean, beyond what we read in the newspapers. You are right inside the You are one of the market players yourself. What's your assessment? What's the general feeling?
Well, for me, it was a case of relief because I wouldn't want to deal with too many unknown quantities. For us as investors and investment advisors, one of the things you do is you weigh all the risk associated with investment. You will look at what will happen to the monetary policy. Are we going to see a higher interest rate? With the government now with the monetary authority focus on inflation or interest rates, price stability and other factors. Then you say, okay, what kind of fiscal policy decisions will the government come up with? So right now we know, we can hazard with a reasonable certainty what the monetary policies will be going forward.
The devil you know is better than...
Absolutely. So absolutely, because like I said, we have a fiscal lacuna. And then that will worsen because if you even use the history we had in the past, where it took the government 6 months to appoint ministers. So you're going to see by 22nd of May, ministers will vacate their positions. So you have nobody managing the fiscal side. So you can't have any policy pronouncement. So if there is a fluctuation or a major upheaval in the global economic space, you need somebody to respond.
But when you keep talking about these fiscal lacuna, are you trying to make a comment on the competence or the ability of the persons on the executive side who are in charge of fiscal policy? Are you saying, they've been incompetent and they do not deserve reappointment, or you will also be recommending them for reappointment?
You won't box me into that corner. Reality is that the central bank governor, in the announcements of the monetary policy committee's decision, has repeatedly said that they need the support of the fiscal authorities. But let's even drill it down to basics. You have a national budget. You have a budget 2019 that has not been passed. The strongest, the greatest tool, fiscal tool, is the national budget. It's not been passed. It's not been signed into law. Today is 10th of May. We've done at least 5 out of 12 months in the fiscal year gone. 2, you look at that document itself and you disaggregate it and you find out too many weaknesses. Take, for instance, revenue projections. The government is projecting a revenue of 6.97 trillion in 2019. Actual revenue in 2018 was only 3.9 trillion, which means ab initio. And then the current expenditure, it has grown from a budget of 3.2 trillion to 4.0 trillion in 2019. If you have actual revenue in 2018 of 3.9 trillion, you have budgeted the current expenditure to 2019 4 trillion. Simply means we're saying that the entire revenue of the government will be spent on the current expenditure. That doesn't include your debt service obligation, about 2.26 trillion. So in effect, you have a core fiscal tool that is already doubtful in terms of its construction. You look at the revenue projections. You look at the revenue projected volumes. These things are not realistic. So do you need any other form of appraiser to tell you that we have a problem with the managing our fiscal policy position today?
What do you think of the CBN's financial inclusion drive and the target of 80% financial inclusion by next year?
Well, 80% may be too optimistic. Some of the things that I should expect that will come back to play is some level of compulsion that was adopted by the previous CBN governor in compelling people to use the financial system, one of which was the cash withdrawal policies that have been realized, the penalties on cash withdrawals. I expect that we have seen a higher level of technological adoption. We've seen a higher level of technological penetration, that some of those policies that will compel people, because I also tell you that the thing about law is that law must be enforced, regulations must be enforced. If you define regulation that are supposed to encourage people to behave in a particular manner, and you don't enforce them or there are no sanctions for breach of those regulations, the regulation will be observed in abeyance. So I think one of the things the CBN governor may have to do is to bring back some of those penalties that were imposed on cash-related transactions, so as to compel people to use the financial system. And that way, you're going to compel a higher level of adoption of the or the growth of the financial inclusiveness policy?
Well, still on Emefiele, there are some people who have said, well, it was inevitable that he will get reappointed because he's been very loyal, he's been pro-establishment. What do you think?
Well, loyalty in this service is not...
Because the people who talk about that, they are saying under him, we have not seen a lot in terms of the independence of the central bank.
Okay, there are two things, two different things. Loyalty and independence are two different things. You can be loyal and still remain independent. If they are saying that there had not been any friction between the monetary policy managers and the fiscal authorities, I do not think people just go and create conflict where they don't exist. If you talk of assertion of his independence, I wouldn't know where there was a compelling need for him to disagree absolutely with the executive arm of government, and he didn't do that. It's only in such instances where you can say that he's towing the direction or he's getting directives from the executive arm that one would say he should have asserted his independence. If there are such instances, maybe I'm not aware of them.
So let's go to foreign exchange management. Would you like to see the CBN governor change his foreign exchange policies?
I will expect that along the line here with some tweaking of the foreign exchange policy management system we have today. We have multiple exchange rates. You have some of the exchange rate window that nobody is even using. There's a 305 naira or so. Nobody uses it. I think you should scrap that. We should move towards a convergence of the exchange rates. Granted that you may have a revenue challenge or a liquidity challenge when you converge. But I think the convergence will eliminate some of the abuses that are associated with multiple exchange rates. I had mentioned to you the abuses associated with discriminatory interest rates. So similar abuses also apply when you have discriminatory or multiple exchange rates, where people could access funds in the official window and round trip those funds to the parallel window and just basically do no economic activity, but just make spread. You can't eliminate that if you have multiple exchange rates. So I believe that the CBN governor should work towards the convergence. We've seen some narrowing in the spread, but the key thing and the ultimate objective should be to achieve convergence and then push the market towards a largely open market-driven exchange rate instead of the managed exchange rate we have today.
Well, I asked you earlier about, the response of market players, market stakeholders, and you have responded to that. How did the markets also react to this news of the re-nomination of the CBN governor, the Forex exchange market, the capital market, and all of that?
The announcement came after the market, most of the markets have closed. The capital market had closed by the time the announcement became public knowledge. Of course, there were rumors yesterday morning that the announcement would be made on his reappointment. But by the time we got to it, the capital market had largely closed. So it is today we're going to gauge the basic market reactions. But in terms of the fixed income space, I'm going to hazard a guess on what will happen, I think we're going to see a further contraction in yield because the central bank has reduced monetary policy rates and they have changed their policy direction to now be that of expansionary monetary policy. So if they're going to adopt the expansionary monetary policy, you're going to see a situation where there will be contraction in yield. So I think what you have is that people will bid for instruments to take positions ahead of further contraction in yield.
So one of the major responsibilities of the CBN is the supervision and regulation of banks, especially in the area of loans. What do you think the CBN governor will do about the current trend of our low lending rates to correct that? Because right now, Tier 1 banks would rather place their money in treasury bills and derive their revenue from charges, charges on their customers rather than lending. How will the CBN ensure that banks boost their lending profile?
The first thing is that the level of borrowing by the government has to come down. And what is happening is that when the government borrows through treasury bills or bonds, they crowd out the private sector. And if the government borrowing comes down, the government borrowing rate will go down. Then the banks will have no choice than to lend. It's very simple thing. And like I said, economic agents are rational. And what do? They look at, why would I lend to you? Run a risk of a 20% non-performing loan portfolio, which is about what we have today, on average, instead of just putting this money in treasury bills in 13, 14%, and then do nothing more than that, other than drink coffee in the morning, and then allow my yield, my earnings to continue to accrue. But if the federal government reduces its borrowing, there will be surplus liquidity available to the banks. They will have no window to go and put this money in treasury bills because the yield on such bills will come down to 4 or 5%. And it's not that we've never seen this. In 2008, 2009, 2010, under Lamido Sanusi, we saw a drop in federal government treasury bills. It's 3%. And the banks were begging. At that point, we, Cowry, we are issuing bond. We handled the issuance of a Ebonyi State bond, and that bond was at 13%. Banks were knocking on our door on a daily basis. Please allocate some of these bonds to us, because it was the best instrument they could input their money in. At that point, the banks were looking for loanable, bankable credits. They were pursuing customers who have bankable credits, because they had to look for outlets to put their money. Otherwise, they're going to make losses because they're paying costs for those funds. And they have their overhead to cover. So the reality is that this economic management must be in totality. And that's why I said we shouldn't have a fiscal vacuum where the budget have been issued is going to compel the government to borrow massively. So if you compel the government to borrow massively, you crowd out the private sector, because automatically the need for government to borrow will compel the government to pay higher rates so as to borrow. And the banks will find that investment outlay with the government more profitable and more risk-free than lending to the real sector. So the key thing is that the government must reduce borrowing. Interest rate on federal government debt instruments has to drop to single digit, and the banks will look for investable or loanable transactions to put their money in.
But do you really think that we are likely to see a more accommodative stance on the part of the CBN and the CBN Governor in terms of further reduction of rates? At the other time, the monetary policy rate was reduced by some small percent.
50 basis points.
Yes, but the cash reserve ratio was still at the same level. In terms of these policy instruments for expanding access to credit, do you think we should be asking for a more accommodative position?
I believe that should be the direction of the government policies or the monetary policies, subject to certain conditions being met. And those conditions will include that crude price remains strong, so the government does not have a compelling need to attract foreign portfolio investment to stabilize the exchange rate. Because managing the economy is a balancing act, delicate balancing act. So when you reduce rates, the implication is you make Nigerian debt instruments unattractive or less attractive to foreign portfolio investors. So if you have, unfortunately, if you have in that situation, you have a compelling need to stabilize your reserve and exchange rate, you have to move up your yield. So if crude price remains strong and crude production remains strong, and therefore there's no compelling need to stabilize exchange rate from foreign portfolio inflows, then the monetary policy should drive towards a single-digit interest rate, so as to stimulate economic growth. An economic growth rate of 1.93% is, for me, is totally unacceptable for this economy, when your population is growing at 2.6%.
But the CBN governor says that's the projection for the first quarter, that by the end of the year, he's hoping that it will be about 3%. Will you still consider 3% too small?
Well, the key thing about projections of economic growth rate is has to be based on policies. It is not a wishful act to believe that your rate will grow. You have to have the policies that will stimulate that level of growth. If we do not put the policies that will create an enabling environment for productive activities, then it becomes a projection in the air. Remember that last year, the federal government projected a GDP growth at 3.5%. This year, they are projecting 3.01%. The key thing and what policies and what sectors of the economy will drive that growth. If you look at the structure of the economy, What rate is agriculture growing at? Agriculture accounts for about 25% of the GDP. Trade still remained in the negative territory. Trade accounts for 16% of the GDP. Telecommunication accounts for 12% of the GDP. What are we doing to stimulate these core segments of the economy? Manufacturing 9%, so as to create higher level of economic activities that will catalyze overall GDP growth rate. You can't just sit back and say it's going to be, we're going to grow. Go and look at the, what they call it, the economic recovery and growth plan or something like that. Go and look at the very sweetened projections. They are not realistic. In fact, they have nobody mentions, again, the projection, GDP projections and the economic recovery and growth plan. Nobody mentions it. So it was just a document that was cobbled together to create some level of excitement. So for me, it's not enough to say the GDP will grow at this. We must have the right policies that will catalyze that growth, projected growth rate.
Now, the central bank has intervened in various sectors of the economy with programs like the Anchor Borrower Scheme for agriculture and for SMEs through the Bank of Industry, such that some have commented that they're operating almost like a commercial bank. Do you think that this is a policy that should continue in this next term of Godwin Emefiele's?
I want to believe that if we have a strong fiscal policy environment, the CBN will not completely divest itself of what we call development finance initiatives. But it will not be dominant. You could have instances where a specific fund is set aside and then given to maybe Bank of Industry or a unique financial institution to manage. But it shouldn't be so pervasive. I want to believe that CBN will, once you have a strong fiscal space, CBN will streamline its development finance initiatives. But most importantly, let's have an interested environment, a market environment that stimulates borrowing and productive economic activities. That's what will address all this. Let's create a special fund for this and create a special fund for this. Those are misnomers, those are aberrations that are created to manage abnormalities. Because if you go to a place like Europe, where interest rate is in the neighborhood of 2-3%, why do you have to create a fund for the entertainment industry? Or whatever you call it. Everybody go to the market and borrow that has a good credit, borrow and a reasonable rate.
Well, see, I go back again to this your point about fiscal lacuna, and I rephrase the question. What exactly do you expect to see in the fiscal space to be able to achieve this agreement between the fiscal side and the monetary side? And will you be recommending a certain kind of finance minister or a certain kind of minister in charge of budget or a certain kind of minister in charge of trade and development?
Well, my take, let me start from whether I would recommend a certain minister. My take is that in the course of employing people to do certain jobs, you look at what is your background.
No, I'm not saying name somebody.
No, I'm not going to name, of course, nobody can throw up a name. But I'm just saying that, look, in the first place you define the qualification criteria of the person you want for a particular role. Then when CVs come to you, you match them against that qualification criteria and see if they meet that. So if they don't meet that, you don't even need to come there for interviews, and also. It is those whose CVs look like they mirror what you expect that you say come for interview. And then in the course of your interaction, you can determine whether they are qualified for that role or not. But back to the issue of what you are saying. The reality is that we need to have a strong budgetary process that is realistic, that's implementable. 2, we need to review our policy as it relates to funding critical infrastructure. It has to be at the fiscal side. For instance, I always want to highlight this. The concept that we're going to build the transport infrastructure and other critical infrastructure using budgetary allocation is not realistic because you don't have the strong revenue stream that will lead to that. The concept that we continue to borrow to fund recurrent expenditure and even debt service, as well as whatever minimal amount we're going to put in fiscal infrastructure, it's not realistic. So the starting point is this: let's review our strategy on funding critical infrastructure, such that if we can identify specific commercially viable infrastructure and attract private capital to build those infrastructure, let's do that. That will reduce the burden we have on the government to borrow, and therefore make it easier for the monetary policy authorities to manage the monetary policy space. Classical example, Ruben, is that the federal government granted a concession to do the second Niger bridge. The new government came into power, reversed that private-public partnership arrangement, and brought the second Niger bridge into the budget. Last week, or was it early this week, the vice president went on Onitsha and announced that the government is going to complete this bridge in the next 4 years. The budget for that bridge is 206 billion. The government has only committed 30 billion in 4 years. 30 billion is less than 15% of 206 billion. In 4 years, you committed less than 15%. You are promising you will finish it in the next 4 years. I can tell you that that project is no longer 206 billion because they have been mob at the mob. There is mobilization and demobilization. They have been exchange rate variation. So in effect, that project would have been completed by Nigerian Sovereign Investment Authority, J.L. Berger, and all those consortium that were granting that if the government had kept it as a private partnership. But if we keep believing that we're going to bring this critical infrastructure into the budget and fund it, it won't work. It creates the problem that the government has to borrow. It creates the crowding out of the private sector. It creates a need for government to monetary policy to maintain high interest rates to be able to attract funding for the government. And it denies the private sector the opportunity to access funds at low cost and go into productive activities.
Well, let me ask you a general question. I hope you won't take it like a jam question. During the spring meeting of the World Bank in March, our Minister of Finance was there. One of the outcomes was the advice to Nigeria that we should pay close attention to what is happening with Brexit. And we should also prepare for a likely slowing down of global economic growth. Okay? And the view has been expressed by some people that, look, the conflict, the trade war between China and the United States is also likely to have implications for national economies that do trade with either China or the United States. How much of a threat do you think that these global currents pose to Nigerian economy, and what should we do?
Well, to the extent that our crude price is very volatile, crude price will respond to global economic growth rate. If the global economic growth rate slows down, the need for factor input will slow down and price of those factor inputs will come down, including crude. So should crude price come down, it will have a very massive negative impact on our GDP growth rate and our level of economic activity, because it is from the sale of crude that will generate the foreign currency liquidity that services the entire economy. So that's one aspect. Then in terms of imports, should Chinese economy slow down, it will have the impact on our import because China currently accounts for the greater percentage of Nigeria's import. But to that extent, and then when you mention the Brexit, if you look at foreign portfolio inflow into the country, the majority of it comes from England or originates from England. So you are going to deal with a situation where financial flow will move out of England into maybe another of the European capital, maybe Frankfurt, maybe Paris. And you have a language barrier. So you have to build a new chain of relationship to wherever capital has moved to. So that could lead some level of disruption in terms of flow of capital into the economy. So the reality is that we're not insulated from whatever happens in the global economy. We can get the transmission effect either from a price of crude or of flow of capital in form of foreign portfolio investment.
Are we really helpless given the circumstances? What do we do?
We are not helpless, but there is also a limit what you can do on the spot. When I say you're not really helpless, the key thing for me is that every country should build an economic framework to minimize the distortion that could happen to its local economy as a result of exogenous factors, which is what basically Trump is doing now. But no country can afford to completely insulate itself from the global economic space. So key thing is that we need to diversify our sources of foreign exchange earnings. So, and that will reduce the impact of crude prices on our Nigerian economy, on our local economy. So there's something we can do.
Well, thank you very much.
I'd like to ask you about the performance or loyalty question. What has been rewarded here? Because there have been allegations, which you haven't raised, I was hoping that you would, about the intervention of the CBN in contravention of certain laws, and that the central bank is propping up a fiscally irresponsible federal government, and that all these intervention after intervention do not address the structural issues that ought to be addressed. What's your view of that?
Yeah, that's what we've been discussing. The reality is that when they say CBN is propping up an inefficient fiscal environment, you cannot operate in a void. CBN cannot operate in a void. It's dealing with level of liquidity, it's dealing with demand for credit, it's dealing with the exchange rate. So in dealing with all these factors, where the fiscal authority are stepping and taking measures that would have made its job easier, and that is not done, it has no choice than to do something. To do nothing is not an option. So it's not a matter of propping up the fiscal side. It's a matter of being compelled by the exigencies of the economic environment to take necessary measures to at least protect the core responsibility of CBN, which is to maintain price stability.
Well, Tundu, I think we've taken so much of his time.
We really have.
We want to thank you very much for always agreeing to appear on the morning show and for your support all the time. Thank you.
My pleasure.
It's time now for a short break. When we come back, Dr. Pupola, a clinical oncologist, and Runsi Shudebe will be telling us about the underrepresentation of Africans in global stem cell donors registries and how we can all change this. Stay tuned.